General of France to record the conference. So it's a great pleasure to welcome you today for this conference 934, Conférence 934. We are happy to continue the cycle of the conferences virtually with this conference, which are prestigious despite the COVID-19 crisis. I say the conferences are prestigious, and I mean it. I recently found a picture of former President Valéry Giscard d'Estaing while he was giving such a conference 5 years ago at the consulate, physically at the consulate. And today we also remember him and pay tribute to him. During the conference today, we will discuss one of the most pressing challenges of our times, climate change. As you know, last Saturday marked the 5th year anniversary of the Paris Climate Agreement. And this anniversary took place in a wave of optimism. Optimism because it was shortly after the election of Joe Biden, and the prospect and the guarantee to see the US re-entering the agreements at a very, in a very short term. But there are also a lot of expectations because we know that as a global community, we have not yet respected all our commitments. As a French negotiator of the agreement summarized it this weekend, and I like this quote. He said that the strength of the agreement lies in the fact that it is a flexible framework, and that this framework can accommodate all the changes within our economies and societies, with the objective to limit the global warming in the long run. It is also an innovative agreement. Its enforcement mechanism is not based on sanctions. It relies on the shared belief that the ecological transition is inevitable. This applies to all cities, governments, states, companies, and financial investors. This all-in approach is needed in the fight against climate change. So to mark this 5th anniversary of the Paris Agreements, we have chosen today to focus on one of the 3 long-term objectives of the agreement, which is, and I will quote, making finance flows consistent with a pathway towards low greenhouse emissions and climate resilience development. So today we are privileged to welcome an exceptional group of speakers that will explain why the role of the financial sector is so critical in the ecological transition. What does this mean for investors and other markets, and why should it matter to the citizens? These are the questions that we hope to cover today. With some feedback on all the initiatives which have taken place on the green finance. So it is my pleasure as a Consul General of France in New York to pass the floor to Christian Deséglises. Christian will lead and guide the conversation today. But he will also intervene also on behalf of HSBC because he's the lead of all the sustainable finance initiatives of HSBC globally. He's based in New York. He's one of the great experts on all this issue, and he's also a member of the One Planet Lab, a group of experts in charge of guiding the strategy of the One Planet Summit, which was launched in Paris in December 2017. You know that the One Planet Summit were meant shortly after the withdrawal of the US of the agreement of Paris Agreement. It was meant to complement the strategy of the Paris Agreement, notably to bring on board more initiatives from the private sectors. So around him, around Christian, we have an exceptional group of speakers who all have demonstrated an outstanding leadership in the fight against climate change. So I welcome Sylvie Goulard. Sylvie is the former French minister. She's today the 2nd deputy governor of the Banque de France and one of the driving force behind the network for greening the financial system that she will present. Bertrand Badré is a former managing director of the World Bank. He's a founder of Blue Like an Orange Capital, and he's also one of the parrains of the One Planet lab that I just mentioned. I also welcome Hervé Duteil, who is the Chief Sustainability Officer for the Americas at BNP Paribas. So I'm looking forward to this very interesting discussion, and I give the floor to Christian.
Thank you very much, Jeremy, and thank you so much for the invitation. You mentioned the One Planet Lab, and Bertrand is one of the leaders, one of the para sponsors of the One Planet, and Sylvie is also on the One Planet working group, and the NGFS, as you mentioned, is one of the leading initiatives of coming out of the One Planet Summit, which took place 3 years ago. Hervé, as far as I understand, has not been able to join. He's trying to join, but the host has disabled him. So if you could help him on that side, I think that would be useful. Jeremy, you mentioned at the beginning that there was a lot of enthusiasm for, at the moment of this celebration of the 5th anniversary of the Paris Agreement, and I think it's absolutely correct that we've seen very impressive commitments from the European Union, the European Commission to go to net zero. Japan also committing to go to net zero now with the new incoming administration, which also will be making similar commitments. I think there is a renewed sense of optimism, but at the same time, I think it's important to realize that 5 years after the Paris Agreement, we have CO2 emissions which have continued to rise, and today, despite all the action that has taken place and despite all the mobilization, we are still on the wrong track, and a lot of effort has to be done in this decade, in the next 10 years, if we want to have a fighting chance, I would say, of keeping the economy on a path to low carbon. Just to give you a sense of the urgency and a sense also of what needs to be done, we need to pretty much halve CO2 emissions, global CO2 emissions by 2030 if we want to be on a path to meet the Paris Agreement targets, which are, as everybody knows, to keep the economy on a warming basis, not well below 2 degrees, and with a target to be 1.5 degrees and no more above the pre-industrial level. So, and we are at one degree of warming today. So a lot of work to do, and a lot of changes in the way we mobilize capital. So just to give you an idea, it's estimated that we will need approximately $50 billion of, if you could please be on mute during the panel discussion, that'd be great. Thank you, Alma. So we're talking about a mobilization of approximately $50 trillion of investments in order to transform key energy and energy using sectors, to transform, massive wave of investments in renewable, in electricity generation, in power grids, in energy efficiency, transforming also the automotive industry towards EV. So $50 trillion in the next 10 years is a lot of money to mobilize and to channel towards green and climate friendly investments. And I think, finance and banks have an enormous role to play in the facilitation and the mobilization of this capital. So I'm really happy to be joined by some of the leaders in this space today, to discuss some of the challenges, but also opportunities for finance to really help on the transition. And maybe without further ado, I would love to hear from Bertrand, because Bertrand has been thinking, is probably one of the leading thinkers on the role of finance and how finance can change the world, and maybe to explain to us why finance is not naturally flowing towards activities that would create long-term and sustainable value. And you know, it's somehow counterintuitive in my view that finance would not be naturally flowing towards a sustainable activity. So I think, Bertrand, if we could get a sense of why we have this issue and the opportunity for finance to play that role would be very useful.
Thank you, Christian. You are way too nice as always, but just for that minute, it's great to be joining. Merci, Monsieur le Consul. I think it's great to celebrate this important event, which has been celebrated properly all over the world, with people seeing the glass half full and people seeing the glass half empty. And I think we will discuss that later during this conversation. Regarding the role of finance, I wrote a book 2 years ago called Can Finance Save the World, which was an optimistic book, which took stock of the commitment made in 2015 around sustainable development goals and climate in particular, and built on the idea that finance will follow the trend and adapt itself to the needs of a more resilient, sustainable, and inclusive growth model. And I really believed in that. I had some vested interest because I participated in the work to these agreements. And I saw that finance being a tool is one of the great things we have found on Earth to manage time and space. You can project money in time and in space and make great things. And it has been historically proven, so that's true. The problem is when instead of being a tool controlled by your hand, it comes the reverse, when basically the tool take control of the hand. As one of the greatest economists of the 17th century once said, Saint Therese of Avila, money is a dung of evil, but an amazing manual. And that's precisely, I mean, the common wisdom say money is a great servant and a poor master. And that's precisely the point. And so we have had this deviation where finance has taken too big a room, too big a space, sorry, in the room. And it's also built on the changes that have happened, particularly in the US 50 years ago, which have really unnerved all our system, the accounting principles, the compensation policies, the governance, et cetera, et cetera. All the rules that really control the way market economy is operating today. It's again, if I want to be very simplistic, it's of course more complex than that. There are two elements, but the bigger one is really the famous article of Milton Friedman in the New York Times in September 1970, where at that time the US were discussing whether General Motors should accommodate 3 board members representing the public interest. That was the name. And Friedman said very vocally and very convincingly, no, the purpose of business is to maximize profit. Public interest is something different. Don't confuse things. This would be, as in his own terms, pure, unadulterated socialism, which was a very, very bad word in 1970 in New York. And that's really where it all started. And that's, it became a political reality with the election of Reagan and Thatcher. In my field, the World Bank, etc., the Washington Consensus. And the fact that in the 1980s, etc., finance has driven the development of new products, the opening of borders, circulation of capitals, etc. We have the so-called shareholder financial capitalism model, which does not naturally incorporate, because it does not fit in Friedman's equation, questions like the one you described, Christian, climate. The economists call this externalities, not my business. It doesn't mean you can't do it today, but you do it without the support of the system. And in the system today, there is nothing to punish misbehavior or vice. There is nothing to reward virtue. You do it at your own risk. So it's still doable, but it's not natural. And so we hide ourselves behind some good examples. We say, oh, look at this guy, he's doing great. Look at these people, they are doing great. Look at these, they are doing great. But the crowd behind is not doing that great. And my point, and I finish that because I've been way too long, is that if we don't really open the hood, take our toolbox and start working on the engine, we are fooling ourselves.
Bertrand, I think that's a fantastic segue into our second panelist, Sylvie Goulard, second deputy of the Banque de France, because when it comes to toolboxes and when it comes to setting the framework, obviously the public sector, policymakers, but also regulators and supervisors have an enormous role to play to better align, I would say, finance and climate. So Sylvie, I would love to turn to you and maybe get a sense from you on really what is the role of the public sector and particularly regulators and supervisors to enhance the ability of the financial system to manage climate risks in a better fashion, but also to mobilize capital for green and for low carbon investments.
Well, thank you, Christian, and thank you all of you for participating. Thank you, Monsieur le Consul Général. I'm glad to do this event, and above all with the One Planet Lab gang, which is a very nice place where actually, and this is part of my answer, people from public and private sector, business and NGOs work together. And the first message I would like to send is that actually we need to pool our forces and not believe that it's just a topic for the others. Second remark, of course, when you, Christian, when you mention public authorities, I just want to make a point on the role of the elected government. They are the ones who can take the tough decisions required by transition. Because above all of their redistributional effects. And in democracies and with the US, we share, and I can say it today even more than ever, we share common values, and we want to promote a certain vision of society where decisions are taken on behalf of the citizens. So carbon pricing, regulation, taxes, this is the job of the governments. And regulators and supervisors are not in charge. What we have been trying to do for 3 years now with the NGFS, so the Network for Greening the Financial System, is to do our part with determination, but without believing that we could replace such a decision as carbon pricing. And what we are doing is, first of all, to stress the fact that climate-related risks are financial risks. So it's part of the duty of central banks to look at financial stability. And today I'm glad to confirm to you, because you've probably seen that the Fed has joined the NGFS, which is a quantum leap. We have been working without any visibility on this side, hoping in our heart that the US will join one day. They did it today. And the idea is to look at climate through risks. Mark Carney delivered the main speech on the topic in 2015, stressing the physical risks, the transition risks, and also the liability risks. Since then, we have been working closely with the Bank of England, but also with many other central banks in the world. Today, we are 95 participants, central bank supervisors or observers like the IMF, for example, or the World Bank. And we try to develop common metrics, because data and metrics are key if we want to elaborate scenarios that are comparable, if we want to know what we are talking about, to put it in a simple way. We have developed some handbooks for supervisors, which for some countries in the South is also very important, because they cannot afford to do this type of work on their own. And we provide a certain transfer of knowledge and experience. And they give also to us a very crucial element, which is the perception of the ones being more impacted or potentially more impacted than we are. We work on how to scale up green finance. We are beginning to think in terms of monetary policy, which is a touchy field, but where we consider that we have a role to play as well, step by step. There is a strategic review of the ECB taking place right now, and I cannot give you the answers because we have not decided yet, but it is one of the topics we are looking at carefully. So to put it in a nutshell, we consider that we can provide our part. We push for disclosure. We have not mentioned the TCFD, but it is a very important initiative taken in 2017, helping to have the common data. We hope that the COP26 next year and the Italian G20 and the British G7 will help us having a momentum, and we will do our best. And once again, we provide part of the solution, not the whole solution. And that's the reason why I'm glad to discuss with people from the private sector like Christian or the inspiring Bertrand.
Thank you very much, Sylvie. And I think you stress this need for cooperation, for collaboration between the public and the private sector. I think it's hugely important, especially as we build this new frameworks. I mean, you mentioned the work, for instance, of NGFS on defining climate scenarios. The Bank of England is starting a stress testing of climate risk, which is going to be rolled out next year, and the type of pathways and the type of scenarios that you are putting together is hugely important and will help the banks better assess and manage. And
if I may, they are not the only ones. We are currently organizing a voluntary stress testing of the banking sector and the insurance companies in Paris and in France, and it was an exercise organized with them, so it's not compulsory, it's not going to be published exactly like a stress test, but I think we need all these experiences. The Dutch National Bank is also doing a lot.
Yeah, and Hong Kong also will probably follow suit. So, which I think brings us nicely to the role that banks can play in the facilitation of the transition to a low carbon economy, and we've seen in the last few months, I think, a really significant ramp up in climate ambitions by banks. So at my bank at HSBC, we announced some new commitments to support the transition to a net zero economy. We are going to be ourselves becoming a net zero bank and aligning our financed emissions portfolio to the Paris Agreement by 2050, and committing substantial sums of money to help our clients transition also to a low carbon economy. We did a survey a few months ago that shows that 85% of companies believe that climate change will impact their business model, and 55% say that they are being impacted now by climate change. So it's not only something which is coming from regulators and policymakers. Our clients themselves are asking for solutions because they see the reality of climate change. So banks have a very important role to play, and Hervé, you have been leading that charge for some time now at BNP Paribas, which is also one of the leaders in that space. So I'd love to hear your thoughts as how you see the role of banks and your climate ambitions.
Sure. So maybe I can tell you at a high level some of the levers of actions that banks can have, and certainly not alone, rather than unroll all the climate commitments that we've taken over the years. Banks, in a very stylistic fashion, can influence the private sector through stewardship, through the dialogue that we have with our clients. We can influence the ecosystem by developing what we call sustainable finance, which is on the financing side. And we can influence the ecosystem also through pricing. So let me go briefly through each of those three elements. The first one, dialogue with clients. Remember, large banks, universal banks have an asset management division, which is managing capital on behalf of others. And we have a finance division, the CIB, the investment banking division. But in both cases, there is a dialogue with a client, and the lever is on the asset management side, the voting that you do at shareholder assembly, and on the financing side, well, it's indeed whether we accept or not to finance certain clients. Investors have the opportunity to be future makers. Traditionally, investors have seen themselves rather as future takers, that is basically understanding what's coming up around the corner and preparing, but not effecting outcome. But it's actually not true. We as investors, and certainly as lenders, do influence outcomes. And if we don't, we may be forced to take a future that neither we or our clients want. So that's the first level of action. The second, sustainable finance, is an opportunity to be influencers. I don't know if finance can save the world, but the world has certainly saved finance in a new way, I would say, over the last 5+ years. By that, what I mean is finance by itself, we're in an intermediary. We're a bridge between capital and projects, but we rarely are fronting the projects. We're passing the money through. So the sustainable finance that has developed over the last 5+ years, its genius, it's not in actually doing things. I think its genius is elsewhere. I mean, there's not much that sustainable finance has financed that could not have been financed by regular finance. But what we've created is what I call a race to the top. The big discovery 5-6 years ago was that when you start labeling the use of funds, and you call it green or social or gender bonds or vaccine bonds or COVID-19 response bond, you uncover demand that you were not suspecting. And as we create, and basically sustainable finance is starting to create a divide between borrowers. You have the green and the brown, you have the green and the greener, the greener and the greenest. And so what sustainable finance is really creating, it's creating a movement where the borrowers are emulating one another to access sustainable finance. So that's the second lever of action. And the last one is, I think, is really to come. It's risk pricing. So it's an expansion of sustainable finance into what I would call sustainability linked finance. So far, banks have participated in this kind of ESG assessment exercise, but as the exercise goes way beyond what is really green, I think we are going to incorporate more and more a cost for something that has been too long, ignored for too long, and pricing will certainly be the third way that we can really accelerate this movement, as where Sylvie said very well at the beginning, where we really need a collaboration of all stakeholders. Any single stakeholder cannot move the system.
Thank you, Hervé. And your name is Hervé Dutheil and not Pierre, as it wrongly says on the on the Zoom. You mentioned something which I think is really important: is this ability of actors to influence outcomes, and this race to the top. And I think, you know, to a certain extent, we've been seeing that for the last few years. One of the initiatives, for instance, of the One Planet Summit in 2017 in Paris was the Climate Action 100+ coalition, which is a coalition of very large institutional investors that together decide to engage with the most polluting or CO2 emitting companies in the world to engage with them on encouraging them on the path to net zero. And we've seen more and more of those I would say climate conscious and ESG conscious investors and coalitions. I think the amount of money now which in the world is managed with some type of ESG integration. So ESG stands for the integration of environmental, social, and governance factors into the investment decision-making process. I think we are at more than $100 trillion of assets. So an enormous amount of money invested with some ESG integration and consideration of climate and other ESG factors. We've seen an enormous amount of products and new funds being created, but there are some areas where I think very little private money is flowing, and this is where, from a macro point of view, there is a huge need to accompany the transition, and it's in emerging markets, because emerging markets together and developing countries represent about 2/3 of global emissions of CO2. The need, for instance, to build infrastructure in emerging markets because of urbanization, because of demographic and economic growth, is extremely important. So making sure that this infrastructure is compatible with the Paris Agreement, is low carbon, is sustainable, is climate resilient, is really important. And the needs are enormous. They've been estimated at approximately a financing gap of about $3 trillion a year, but very little money is flowing into that. And Bertrand, I know you've been focusing on helping fill that gap. You set up Blue Like an Orange to be one of the providers of capital. So I'd love to have your experience on the role that finance can play and capital from here and from Europe in the greening of emerging markets. Would be very interesting. You are on mute, Bertrand.
Even after 1 year of Zoom, you still forget to unmute. That's really bad. No, thank you very much, and thank you, Sylvie and Pierre, for your inputs as well. I think there is a particular case, as you rightly said, Christian, for the emerging economies. I might be too optimistic, but I believe we will get there in the EU, in Japan, in the US, etc., where it's going to be not a rosy journey, and we know it's tough, and we've experienced, in particular in France, a number of reactions, but I think it's getting there. It's way more challenging in emerging markets for all the reasons that have been debated during so many COP meetings. And to be simplistic, this is, okay, guys, the old world, which has really used the carbon budget for so many years, want us to join the crowd now and do the best immediately. So what do you expect from us? And it's a difficult situation. On the other hand, you can argue that the emerging world can benefit from a number of technological advance. I mean, the decrease in the cost of renewable, etc., will also benefit. So it's a mix of things. But the truth is that when you're faced with that question today, you had a number of difficulties to one another, and in particular the fact that with the COVID, actually, which has reinforced the hesitation vis-à-vis investing in emerging markets, despite some flows, but they don't go there immediately. I mean, they go to other emerging market asset classes. There is this risk issue, which is still pending. And so a number of people, and I've done that myself, trying to raise money for my fund, are a little hesitant vis-à-vis the emerging market issue. Plus, they really want to have perfect infrastructure projects. And we've been discussing that many times over the years with Christian. I mean, we all are calling for an infrastructure asset class, and we want to make sure everything is kind of okay and that the DFI contribute, etc. And at the end of the day, today, you have a lot of the pieces on the table. And again, I pay tribute to the energy and patience of Christian putting things together. But we still have to do the last mile to bring together the public sector, in particular the DFI, the private sector. By that, I mean people like me, which are investing on the ground, but also the asset owner, pension funds, sovereign wealth funds, insurers, etc. And really go in that direction together and bring this to another scale. What worries me after this crisis is that we have fallen in two traps. The first one is more of the same. So we have not really changed our approach to things. And so the DFI in particular, but not only, I say, okay, we were doing 10, let's do 20, but the same. And so it's not working better than it was before. It's just, so we have to do things differently and to really engage public-private together. I think not just in words, but in reality. And I think what Pierre and Sylvie have said is important. We will not succeed alone. And the second trap is not invented here. Everybody wants to have his little toolbox, his little things, his little standards, his little approach, etc. And so we can't get naturally to the next stage. And again, what Christian has developed under the auspices of the One Planet is important. There are initiatives in that direction, but I think the sense of urgency is not there yet. So, and again, this is one of the, I finish with that, this is one of the greatest shock of this COVID crisis. Whereas earlier this year, the UN, the World Bank, etc., all said that the emerging and developing economies will need 2 to 3 trillion support, and they got few billions from the G20. And then, okay, you say, well, we have discussed with the Paris Club and China will join. It's still at the margin. It's not bad. But don't misread what I said. It's a progress. But there is nowhere near, we are nowhere near a show of solidarity and sense of urgency where, okay, now is the time to really green this economy, help them go there and do it together. So that's where I'm coming from.
Thank you, Sylvie. Please.
No, I don't want to be too long. First, I want to pay tribute to Hervé because I know what he did in the CFTC report, which is an excellent example of interaction between public, private, and cross-border. So great. Well done, and the move in the US federal agencies is quite impressive this time. Now, just one word on what Bertrand said, and then if you want to open, I don't know, to discussion, or I don't want to be too long, but the truth is that climate is a disruption. And if you look at it from the financial angle or from the legal angle, for example, do we need to change our vision of property rights? Do we need to define natural capital? Or do we consider that as human health is impacted, we should think differently the way we look at the silos in which we work between the people dealing with environment to the one dealing with health, etc. And we are just at the beginning, and to a certain extent, I perfectly understand and I feel it myself. You have a feeling of being overwhelmed by the magnitude of the change you have to organize and to accept. And we are not far enough. And here, Bertrand, I would quite say, I fully agree with you that in the key issue is the emerging countries. But we are the ones with so many means. We are the rich ones. We are the ones who created the stock of CO2. We cannot continue as we do, and it's with all the efforts the French government is doing, many governments, the UK one, the EU. I don't want to give marks, but we are by far not where we should be, and we should stress that. And the consequences, if we wait, will be even more difficult to tackle than before. It's not because it's dark in France already at this time and it's gloomy, but I really need to emphasize the sense of urgency and to shine light on this.
Yeah, no, I totally agree. And maybe Hervé, you could give a sense of, from your point of view, of what has worked in terms of really, moving allocations or innovation that have become large asset gatherers. I'm thinking, for instance, of green bonds, which which have been a success. You mentioned sustainability-linked finance. I mean, are those tools really able to tip allocations so we can accelerate the transition?
Sure, it's a very good question. I'd like to follow up on what Sylvie was just commenting on, and it will link nicely, I think, into your question. The problem right now is that many view the transition as a cost, when there is a way to view it as a pro-growth exercise. The problem is we currently don't have the right baseline. We really need to change or to evolve our metrics to value the future in the present. And if you do that, if you reintroduce risk premia in asset valuation, Sylvie was mentioning natural capital, for example, or carbon price, if you reintroduce those risk premia that are simply ignored today, you view the future in the present very differently, but you also view a number of actions as actually very, very supportive of growth. So I think the answer to your question, Christian, of course, I could list a lot of things, and I will list a couple, of concrete things that you can do. But for me, the key is to really change the lens in which we are looking at the future. There was a very interesting study done by Harvard recently that showed, for example, that first of all, 1,800 companies are creating $200 billion of environmental damage every single year. Now, of those, 250 companies are delivering more environmental damage in monetary terms every year than the profit they generate. Just to show how the metrics are really distorted. So there is this movement actually to call for impact-weighted accounts. Now, coming to banking, I think what is key is really to align our lending portfolios with the Paris Agreement. So we at BNP Paribas have been, in the Katowice coalition from the very beginning, and are using the so-called PACTA tool, the Paris Paris Agreement Capital Transaction Assessment tool, to really look at sector by sector how our credit portfolio lines up with a transition pathway that's compatible with the Paris Agreement. And we're really looking at where it is today and where it will be in 5 years' time. So it's really a forward-looking instrument, tool, if you wish. So for me, what will move things at scale, it's first to have the right lens in the present. Now, of course, many things can be done in the past. In the asset management side, passive investing will be key, and I think we're just on the verge to see the explosion of ESG in passive investment, because as we are customizing indices, we are creating the tools to integrate ESG, and this is really what sustainable finance is doing. It's not growing the financial markets. It's not an opportunity to create market share. Yes, you can grab market share from another bank if you do it, but it's a zero-sum game. What sustainable finance is really doing, it's not growing the financial market, but it's transforming the financial markets, and I believe it will transform them 100% between now and, let's say, 2025. So far, we focused on the financing of the green, but integrating risk pricing and accelerating transition is the way finance will scale up.
Maybe I would like to go back to Sylvie and on this point, what regulators and supervisors are doing and will continue to do to facilitate this reallocation or better integration of risk. You mentioned TCFD. We talked about the need for standard disclosure. There is also a question here in the chat on how to effectively integrate ESG related risks into an enterprise risk management system, while there is such a lack of data standardization, transparency, and too much immateriality. So how do we get to some, you know, more standardized disclosure and measures, and how do we measure impact? How do we make sure that an investor portfolio or a bank portfolio is aligned to the SDGs or aligned to climate goals?
Well, there is a lot of work to do, but first, actually disclosure in order to get more information on the portfolios of the banks, which will have an impact on their relationship with their own clients. I was recently in a panel with someone from BNPP in France, with the nice name of Mr. Soleil for someone dealing with renewable. And he was stressing the change in the relationship they have with their clients. When I go for the bank on the ground, I had recently a chat with SMEs, and they all stressed, and not only from BNPP, I'm not there just to make advertisement for you, but they were all stressing the fact that their efforts toward more sustainable ways of producing or waste treatment are beginning to be taken seriously by their banker, not just because it's nice, but as a reduction of risk or as a potential of growth. As you said, Hervé, exactly, we need to make the people believe and to make it real that you can make money in being more sustainable and respecting the environment, etc., etc. So first, if you oblige the sector to disclose, then you enter into a new type of relationship. I really believe that the stress testing is also important because, of course, it is only when you begin to look at, it's when you put your money where your mouth is that you discover how complicated it is. We have seen this with the portfolio, the own portfolios of the bank, our pension fund, for example. When we try to do what we preach, then we realize, I'm chairing the risk committee, I can tell you it's quite tricky. The other thing that we can hope is that at a certain point, the ESG vision and the financial risks evaluation will merge. Because now we say climate risk or climate related risk is a financial risk, but actually we continue to evaluate risk, and then we add a pinch of salt of ESG, which has to change. But of course, it's a process and it will take some time. And very last remark on the TCFD. As climate is global, it was stressed by Bertrand, it was stressed by Christian, we need a global platform, which is the reason why I'm so glad that Emmanuel Macron, our president, on Saturday in the big meeting in Paris, underlined the necessity to support the TCFD as a common framework, which does not mean that the Europeans cannot be more demanding or that we cannot add some forward-looking elements or develop our own tools. But it has to remain comparable, it has to remain as standardized as possible and worldwide. And that's the reason why we can only welcome that the US are moving, because the size of the US economy can also help to push in the right direction.
Thank you, Sylvie. And I just want to remind everybody that they can ask questions directly or via the chat function. So please do. We have another 7 minutes, and we'd love to hear from you. But Sylvie, what you said, I think is somewhat encouraging or reason for optimism. We see some important pillars of finance that are integrating climate, integrating ESG. The fact that the Fed is joining the NGFS is also very, very good news. The Biden administration has an important plan to become net zero, and also to invest in renewables in the US and accelerate the transition of the energy system. Is it time for some kind of new sustainable Bretton Woods? And maybe that's a question for Bertrand to rethink. There is clearly alignment between Europe, the US, and China. I think on this vision to become net zero by 2050, 2060 in the case of China. But is it time to push some new ambitious ideas?
Yeah, I believe. I mean, the president himself, maybe he was wrong actually, but that's the word he used. Say we are at war in March, and so we all know that after a war we need a peace. And when you discuss peace, you have two avenues. One is the Treaty of Versailles, and the second one is Bretton Woods. Treaty of Versailles is to find who is guilty and punish them, and see how you can reorganize the world to your own benefit. And I don't think this is what we want, but it's a typically America first, France first, Germany first, etc. type of mentality. I hope we'll avoid that. Or you go the Bretton Woods avenue, where basically you might argue that Bretton Woods was led by the US, which is true, but still it really reopened the door to globalization after the Second World War. And so the idea to discuss the system in itself, I think, is extremely important. One of the frustration after the global financial crisis was that we basically did patch up the system. So it was good because we are not dead, and it's positive, but we did not really work on the redesigning of the system. And I think now is the time to work on that. So it's not just the collection of public commitments to zero emission by X or net zero by Y, etc. It's really working on making everything we discuss mainstream. This is really the art of the system. And that's all the efforts. I'm coming back to the nitty-gritty details of our daily life, which of course I had this conversation with one minister. You say, well, Bertrand, what you say is great, but I cannot go to the TV and explain to people that we need to discuss accounting rules. Yeah, I mean, true, it's not very fun and it's not very easy, but at the end of the day, it does matter. When today you have the CEO of a large company, and I have a practical example in mind, we say, well, this investment decision is rational, but from an accounting perspective, it doesn't make sense. Where are we? So that's precisely the type of thing to avoid. And we should not hide ourselves behind the fact that accounting is technical. Reflecting on the way we see the world. And so if we don't incorporate accounting in our governance, in the compensation policy, in the way a rating is analyzed, disclosure, etc. So there are a lot of things happening. We are not starting from scratch. There are efforts everywhere, but we have to go to the next stage. And the way the system has socialized after Friedman, we need to socialize this new system. It will take time. And interestingly, Milton Friedman was an amazing guy, said when the Bretton Woods system collapsed, my system was ready to succeed. And so, unfortunately, our system does not yet totally seem ready to succeed, the Friedman paradigm, but maybe time to hurry up a little bit.
Well, I fully agree with Bertrand on, if I may, on the two-track, and we should avoid it. But I'm always cautious on the war metaphor. If I was not the only woman in this Zoom room, I would say that maybe it's because we had too much of this type of vision in international relationships that we have where we are. So what we really need is to redefine a new common ground, but we have to be very careful. And I'm committed with all my heart to the NGFS and to everything that we have been doing for years. But we should not underestimate the fact that right now there is nothing binding, there is no enforcement, there is no dispute settlement mechanism. People cannot be made accountable for the fact that they don't respect their words. So we have to go beyond something which is nice and a kind of a discussion between states. We have to make sure that we reach the point we have reached in the European Union, where to a certain extent, if you don't respect your commitments or you breach the rules, then you are put in front of your responsibilities. It's getting serious. So it's Bretton Woods plus. And if I may add something with less silos, I'm in a commission created by the WHO Europe where we try to look at health post-COVID and sustainable development. And here, the fact that you have the silos between the people dealing with food and the people dealing with climate and the ones dealing with finance is something that is not helping to find the right solution.
And Sylvie, just building on that, talking about silos, there is a question in the chat on, there have been discussions of harmonizing reporting of GRI, SASB, TCFD. Is that a good idea, and how long would that take for parties to agree? Okay, you are on mute, so if it's intentional, if it's intentional, we can keep you on mute. Pierre, Hervé, I'm sorry. Any color on that?
I'm not on mute, but I'm speechless. No, I mean, maybe just to expand from here and maybe as a final word, because I think we're reaching close to the end, but I want to see the glass half full. I think we've, you know, as we celebrate the 5th anniversary of COP21, I mean, we've really come a very long way. And now COP26 and the next 5 years will be all about implementation. Companies have made great commitments, banks and regulators and many others, you know, have put in place backbones that really make sense. Now it's all about delivering operating plans for corporations and for banks and the financial system to now disclose very transparently of where they are, what the targets are, and report on progress.
Thank you. Thank you, Hervé. And accountability, as Sylvie would say. Sylvie, maybe some final closing words from you.
No, just that I'm sorry that we did not answer the question. I hope people are not frustrated because I will have to lead, but I will just try to say on that on going beyond climate. I'm really keen to do that with all the precautions, because we have to go step by step. We don't always have the data. We need metrics. On climate, at least we have the scenarios. We know that the goal is net zero, so we can quantify. I'm not saying the rest is not important, not at all, but we just have to be sure that we don't make promises we cannot stand. And well, no, I'm just happy, as Hervé said, that we are in a phase where things are moving, but we should not be complacent. And that's my last word. So let's do it again and take stock of where we are in some time.
Thank you. Thank you, Sylvie. Bertrand, any final word? And then I'll pass back to Jeremy.
Let me just finish with a quote that I've used and probably in a very abusive manner over the past few months. It's very famous, but it's worth keeping in mind, from Tolstoy in War and Peace, where he says, everybody wants to change the world, nobody wants to change himself. And we must be aware that there is no master of the world that will decide that we collectively choose the right decision, the right avenue. And so it means that at every level, we have to make decisions, and that's the call I make in my book. It's important what the regulators is doing. It's important what governments are doing. All this is absolutely important. But if we ourselves, as consumers, as investors, as workers, as entrepreneurs, as civil servants, etc., we are not deeply committed, it will not happen. And also, it's extremely important not to wait for the solution to come from the outside. And we know it's very challenging. I mean, I'm facing my contradictions every single day. But it's important that we keep, contrary to Sisyphus, I mean, we'll pass the mountain and the rock will fall on the other side, but still we need to push.
Thank you, Will, and thank you very much for your leadership in this extremely important topic. Back to you, Jeremy.
I just want to thank you very much. It was a fascinating discussion. What I like, it was very easy to understand, even for non-specialists like I am. So we will ensure a very large diffusion of the conference, because it was really interesting, stimulating, and it gives some positive spirit and a sense of optimism, even though the task ahead is tremendous. And I will reflect on all the quotes from Bertrand, which I find very very fascinating also. So thanks to Christian, Sylvie, Hervé, and Bertrand for this very interesting discussion, and hope to catch up soon. Thank you very much to all of you.
Happy holidays to all.
Thank you
Happy
to all of you.
holidays.
Happy holidays.
Bye. Thank you.
Bye bye. Bye bye. Bye bye.
Thank you. Bye-bye.